Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. On today's show, Bitcoin crosses 90,000 as Trump delays Canada and Mexico auto tariffs. Also, veteran trader believes Bitcoin low is in, says downside volatility presenting bullish opportunities. Also on today's show, Rich Dad, Poor Dad issues warning to Bitcoin sellers, says President Trump understands power of BTC. All this and so much more on today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is March 5th, 2025, and Bitcoin in the green once again. Let's not waste time. Let's get right into our market watch and Bitcoin technical analysis and see all the greenery. Bitcoin up 5%, 91,601. Ethereum up 4.5%, 2,277. Solana up 3%, $148. XRP up almost 3%, $2.52. Doge up 3.5% at 21 cents, reaching. Crypto Bubbles shows us that about 90% of the crypto market is in the green today, including BCH up 20%, Move up 16%, AVE up 16%, Ondo 20%, JTO up 13%, Link up 16%, whole bunch of greens. Zooming out to the weekly, we see that BCH up 35%, HBAR up 26%, ADA up 50%, Ondo 20%, PLSX up 24%, BTC in the mix up 8.5% on the week. Ethereum also up 11% on the week. And let's zoom out to the monthly. And we've got about 75% in the red for the month. Sonic is a definitely big green for the month. 31%. Maker up 38%, PLSX up 23%, Cardano up 22%. Current market cap is sitting at $1.814 trillion for Bitcoin. Ethereum's at $274 billion. XRP, $146 billion. They have flipped Tether in terms of market cap. Solana at $75 billion, Cardano $34 billion, Doge $30 billion, Tron $21 billion, Pi still sitting up there in spot 11, $13.7 billion, and Chainlink number 12 at $11 billion. Bitcoin dominance, currently the current market cap up about $10 billion from yesterday at $2.94 trillion. We have a Bitcoin holding up the pack with 61.61% of the total crypto market cap. Ethereum 9.3%, XRP 5%, BNB coin 2.9%, and altogether the rest of the market holds 8.5%. We are sitting at a 25 in fear at the moment. Yesterday it was a 20 in extreme fear, and last week a 10 in extreme fear. There are 1,135 days until the next halving, and that equals to 163,515 blocks left to mine until that time. The top assets in the world, currently we have gold, as usual, up top at 19.7 trillion, Apple 3.5 trillion, Microsoft 3 trillion, Nvidia 2.8 trillion, Amazon 2.2 trillion, Google 2.1 trillion, silver 1.873 trillion, and just behind silver in the number 8th position is Bitcoin at 1.807, and even getting closer, 1.817 after the refresh. Saudi Aramco number 9, 1.735 trillion. Meta number 10, 1.6.5 trillion. And you can currently get 1,091 satoshis for one fiat US dollar. Speaking of the fiat US dollar, the current US national debt is up close to 5 trillion from yesterday. 36 trillion. 5 billion from yesterday. 36 trillion, 500 and just under 60 billion, equaling to 107,384 per U.S. citizen, or 323,047 per U.S. taxpayer. The big chunks keep owing, but I think the market is up a little bit for multiple reasons today. There's a bit of a hype going on because we're going to see the first crypto summit coming up this Friday in 2 days. Additionally, Trump delays the tariffs on Canada and Mexico with respect to the auto industry. Bitcoin fundamentals held up well during the latest dip, suggesting underlying strength, says Swiss Block analyst. In the latest whipsaw of headlines this week, Donald Trump's tariffs delay Wednesday eased investor worries, with Bitcoin leading the crypto market higher. The U.S. government confirmed the delay tariffs on auto parts coming from Canada and Mexico by 1 month, just 1 day after enacting them. Germany's plan to ease debt limits for infrastructure spending in China, hiking its target deficit, also contributed to rebounding risk markets. BTC climbed just above 90,000 on the news, currently at 91,000, up about 5% over the past 24 hours. Almost all assets in the broader market, CoinDesk 20 index advanced, with Bitcoin Cash, Chainlinks, Link, and Aptos booking double-digit gains. And here we have a chart of the big gainers of today. Yeah, looking good. BCH, Bitcoin Cash, 25% for the day. The tech-focused NASDAQ and the broad market S&P were also up 1.2% and 1.5% respectively in the afternoon hours of the session. Crypto-related stocks also climbed higher from the early week lows. Crypto exchange Coinbase was up 3.5%, while the largest corporate Bitcoin hodler strategy, MicroStrategy, gained nearly 10%. Trade tensions and geopolitical risk have taken center stage lately, weighing on investor sentiment, pressuring risk assets like U.S. stocks and digital assets lower. Similar risk off episodes have usually led investors to flee to the U.S. dollar, translating to downside pressure on crypto assets, says Joel Kruger, market strategist at LMAX Group. However, this time, the U.S. dollar index centered to its weakest level since early November and is down more than 5% from its mid-January peak, with Fed rate expectations shifting back to pricing more rate cuts than less in 2025, and with Bitcoin capable of shining as a store of value assets. We believe there are plenty of reasons to expect Bitcoin to be well supported on dips, Kruger said. Crypto analyst from Swissblock noted that despite the wild price swings over the past few days, the firm's Bitcoin Fundamental Index, which measures the overall health of the network, held up relatively well. Bitcoin's fundamentals are on the verge of shifting into the bullish quadrant, with sustained improvements in liquidity and network growth. Swiss block analyst said in Telegram broadcast. The strength suggests that BTC is unlikely to be driven into a bear market. Yeah, that's what we like to hear, right? Back to the bull market. We can not take this bull market for granted as we did recently. I know we're talking about the 4-year halving cycles, and historically, let's get into the charts here, the historical chart, and take a closer look. Historically, it is bullish. However, with all this tariff stuff, it's a little nerve-wracking for the common investor. My thought for myself is, keep buying the dip. Don't let go of that strategy, because as we've seen so far, buying the dip has gotten you into quite a good position, even 1, 2, 3 days later. So here we've got the 1 month chart, and we see that, there's the volatility. We were trading sideways for quite some time there. And even if we flip out into the 3 month, we've been really going sideways. Then we took the big dip about a week ago down to $78,000 and almost immediately pumped back up. Then there were talks about tariffs. There was, the big dip happened right here toward the end of February. First, there was the scam of $1.4 billion with BitBuy. They stole Ethereum, which of course they were trading for Bitcoin, if you guys didn't know that news. So funny, they don't even want the Ethereum, right? The scammers don't. They just trade it right for Bitcoin, the good stuff. So big dip, then followed by, an upswing, then followed by downturn, then followed by more recent news of crypto summits, and today easing of the tariffs for another month in terms of the auto industry. So this has been a very, very up and down time. If you took advantage of this, you could have done really well. For example, right here, 78,000, buy the dip. Price automatically goes up literally days later. Then price tanks again, buy the dip. Price goes up almost immediately. So hopefully, we closed the head and shoulder pattern, which let's zoom out to get a better look at this. So if we zoom out a bit, here was the head and shoulder pattern, which began really November of last year and started at about the 70, right there at 75 to 78,000. Big jump. Then we had the big head and shoulder. Here's, the head. It literally looks like a human being, right? Shoulders, head, chin. It doesn't get more human than that. And then, of course, we traded sideways for a very good chunk of time and then dipped down to hopefully close that head and shoulder pattern at about the same level as where it started, which is about $78,000. Now, if we zoom out further, and let's just go to the all-time chart here, and let's make things a little more visible. Excuse me. If we look at the historical trends, and this is what I was talking about a moment ago, we can go by the historical charts because, as we see, things always went up the year after the halving. First halving, price went up. Second halving, price went up. the year after the halving. Third halving, price went up the year after the halving. And then we have the current halving. So let's hope that we get a sustained historical pattern that follows the past halving cycles. So, first we 19x'd in 2016, then we, in 2012, then we 8x'd in 2016, 2017, then we 7x'd in 2020, 2021. And now my prediction is, I would say bearish compared to that, but I'm predicting a 3x to a 6x. So a 3x from the halving date brings us to a price of 220,000 per coin, and a 6x brings us to 378,000 per coin. Not far from reality, I feel. That's personally the amount that I'm looking at, somewhere between 220 and 380. Many other analysts are in that range as well, and I presume they're probably doing similar kind of work like I am. And of course, if you guys want to check this out yourself, I suggest you do, and you learn a little bit. And you can do this. This TradingView.com is not just for Bitcoin. You can technically do this with any stock, whatever symbol you can find. You can pop it in here and do your own analysis, historical charts, and come to your own conclusion. But one thing that stays static is buying the dip. No matter what you do, I've said this many times, always buy the dip. Even if you're buying real estate, buy it on the dip. If you're buying, gold, silver, stocks, Bitcoin, crypto, buy it on a down day, on a red day. Like, for example, today, probably not a good day to buy, right? Today's a green day. Past couple days, a green day. It's never a bad time to buy Bitcoin, as Michael Saylor's shown us. However, if you can buy it on a down day, you're already in a good position to make profits almost immediately. So we have veteran traders who, I suppose, probably know more than any of us. And we have a veteran trader that believes the Bitcoin low is in, just like I do, and they say the downside volatility is presenting bullish opportunities. A closely followed crypto analyst says Bitcoin may have formed a market bottom and is now looking bullish. Crypto trader Rect Capital tells his 541,000 followers on the social media platform X that Bitcoin is printing a bullish pattern of higher low prices on a daily chart after last week's severe correction into the high 70,000 range. It was exactly 78,000, just under 78,000. Looks like the higher low is in. And here's their chart. The higher low is back up. The head and shoulders pattern is finished, as we were talking about. And now the higher low, they're pointing at 88,000, which is the support level seen in the original part of the head and shoulders trend. He also noted that Bitcoin may be turning bullish without fully closing the CME futures gap in the 70,000 range. The CME gap is the difference between the Friday closing price of Bitcoin futures and the Monday opening price on the Chicago Mercantile Exchange. Looks like Bitcoin indeed performed another downside, deviating in order to form a higher low relative to last week's low of 78,000, without having to refill that lower partially filled CME gap as well. So they've got the CME gap right here at 78K. The analyst says that Bitcoin's latest severe correction is not unusual when compared to price action in the current bull market cycle, as well as previous bull market cycles. Back in mid-December 2024, Bitcoin needed a 25% pullback to reach the top of the CME gap between 78,000 and 80,000. In other words, it needed to drop a similar amount to retrace we saw occur around the post-halving period of a minus 25 to minus 30%. This retrace isn't just ordinary by standards of previous cycles where 30% retraces were the norm. It is ordinary by standards of the current Bitcoin cycle as well. He also says that the corrections may be buying opportunities. Yes, indeed. Worries about a premature BTC bear market will stifle your participation in a bull market. According to Rept Capital, the key level for Bitcoin to break on the weekly chart, reignite bullish momentum, is 93,500, and we are so close to that, folks. We are at 91K right now, but as we saw, we're way up compared to a couple of days ago. There are other great, smart, rich people that are also really bullish on Bitcoin. We've got our friend Robert Kiyosaki, and I actually enjoy whenever he puts out a post. And today he's put out a post, Rich Dad, Poor Dad issues warning to Bitcoin sellers. Says Trump understands power of BTC. Best-selling author Robert Kiyosaki says he bought more Bitcoin during the recent correction and that sellers might regret their decision. Yeah, if you sold, the price already went up and now you've got to buy in again at a higher price. The Rich Dad, Poor Dad author predicts that at some point during Donald Trump's presidential term, the president will start buying Bitcoin as a way to fix the U.S.'s financial troubles, pumping the Bitcoin. People who sold Bitcoin in the last crash are losers. He's just blatant. I love it. Don't they know who the president of the United States is? President Trump. The right president at the right time understands the power of Bitcoin. When he begins buying Bitcoin to help solve America's financial insanity, those who bought Bitcoin in the last crash will be the winners, and those who sold will be the biggest losers. I bought more. Did you know? Robert Kiyosaki says if a Bitcoin is a scam, then the dollar and the U.S. banking systems are bigger scams that likely won't last much longer. Is Bitcoin a scam? It might be, but not a big scam as the U.S. dollar and the U.S. banking system, starting with the Fed. I agree with that. They are banksters. This criminal enterprise cannot last much longer. I predict a collapse of our financial system. Please protect yourself from the banksters. Buy real gold, silver, and Bitcoin. No gold, silver, or Bitcoin ETFs, which are banksters' money. 100% agree with that, guys. We talked about this in terms of fractional reserve yesterday, and they do the same with the ETFs. They'll buy an ounce of gold, and then they'll sell that same ounce of gold in an ETF to 20 people. So you think you own an ounce of gold in the ETF, but 20 other people have staked ownership to it. It's ridiculous. So if you're going to buy gold and silver, to me right now, silver is the better buy. The gold to silver ratio is way out of scope right now. Traditionally, it's 50 to 1. So 50 ounces of silver, if you add up the cost, should amount to the cost of 1 ounce of gold. But right now, it's I think it's 80 to 1, something along these lines. So I feel like silver is going to bridge that gap soon enough, and you're going to get a big upswing. You got a big upswing with gold recently, and silver followed a bit. But, if we just go back to our crypto our U.S. debt clock, and we hit the precious metals section. Actually, we don't even have to do that. It tells us right in the main window here. Dollar to silver ratio right now. Dollar to silver ratio in 5 years. So, it's looking like a 30-40% pop. And if you look at the gold to silver ratio, it's actually pretty similar, about a 30-40% pop. I just feel like the ratio for 1,000 years has been 50-1, and all of a sudden it's way beyond that. So I feel like silver, not only is it affordable, because gold is a lot of money, right? $3,000, I believe, for an ounce. Silver is $40. I think it's 30 actually. So you can technically buy small amounts of silver. Yes, get a safety deposit box, put it in the bank, or if you have a safe spot at home, put it there. But be careful to take good care of it. Get the capsules for them, put them in Ziploc bags so the air doesn't get into them. But definitely, a safety deposit box for the $100 you spend, it's worth it. And then you can just start stacking silver, start stacking gold. Kiyosaki's been doing it since the 70s. Now, of course, it's not going to make you as much as Bitcoin is going to make you, the way things are looking and based on the historical charts, but it's certainly safer than fiat money. And that's why Kiyosaki's been basically stacking gold, stacking silver all this time. And now, for about a year, 6-8 months, he's been stacking the biddies as well. In late January of this year, Kiyosaki predicted that the largest stock market crash in history would happen in February, and that Bitcoin would boom at the same time. Yeah, so he's kind of on par. He's a smart guy, very rich man. I think he knows what he's talking about. And when he says, buy gold, buy silver, buy Bitcoin, I believe him. The guy's driving around with 3 Lambos. He's done something right. And also, he just does not trust the government, as a lot of us don't, in terms of the financial system. They've been, pulling one over our eyes for decades. So it's time that everybody front runs the bankers, the banksters, as Kiyosaki calls them, and gets into the biddy, makes some money on the biddy. Let the banksters come in second. And as they come in, they're going to pump the Bitcoin on your behalf. Lots of money out there, guys. $900 trillion in assets worldwide. And we were just talking yesterday that Michael Saylor predicts that at some point, he didn't give a timeline, but at some point, Bitcoin is going to have a 200 trillion market cap. So let's just put that into perspective quick before we wrap things up here. Right now, when the price of Bitcoin goes up or down on a daily basis, it's going up, $1,000, $3,000, $5,000, and that's 5%. If Bitcoin's trading at $1 million, 5% is 50 grand. So imagine the fluctuations that we're going to be talking about. And if it goes up to 10 million, a one-day fluctuation of 5% is $500,000. So there's going to be a lot of FOMO. People who don't buy it now, if all the analysts are predicting the price is going to go up, everybody on the web is predicting the price is going to go up. And in 5 or 10 years time, there's going to be people that say, you know what? I could have bought it at 100 grand and now it's $15 million. This is the kind of scenario. It's just like Personally, I could have bought Apple. Apple was bankrupt. Um, I was around to see that, potential bankruptcy, and Apple stock, I think, was a buck. It was definitely under $5. It had crashed to jack all. And I'm not going to touch it right back then. I should have been smarter. I should have been buying the dip and saw that, the second biggest computer company in the world, or maybe at the time it was the third. There was Microsoft, there was Sun Micro, which is basically Unix/Linux now. And there was Apple. So I should have seen that there's no way this company is going to go under. Then they got turned around, and now it is, as we see, the second right behind gold in terms of market cap. So in retrospect, it's worth putting a few bucks in the biddy. You can start with as little as $10. So, if you can get yourself up to 0.1 of a Bitcoin, which is, 10% of a Bitcoin, slowly but surely, as per Michael Saylor, if you've got 0.1 Bitcoin, you'll be laughing into the next, decade or the next few years. So dollar cost average, put a little bit if you're worried about Bitcoin, dollar cost average into multiple things, gold, silver, Bitcoin. Keep a couple percent to put into very highly volatile shit coins, we'll call them, the kind that come out, go up 5,000%, and then drop to nothing. But ideally by then you get in, you get out. It used to be that these shit coins would come out and you'd have 2-3 weeks to buy your shit coin. The price would go up. The price would steady, and then you'd get out, and then the price would kind of drop down. Then it got down to a week. Then it got down to hours. Now it's about 45 minutes. If the coin comes out, it skyrockets, and you got about an hour to make your money and get the hell out of there. And sadly, the people who are really making the money on these are the early adopters, the people that are creating these coins before they even go to sale for the public. The moment they go for sale, the price has already gone up, 8,000%, and you're already buying it at that 8,000% high. So even those days are kind of challenging, not like the way they used to be. But do remember, there's $900 trillion of assets out there. Money is everywhere. Money is abundant. It's time that's scarce, so spend your time wisely. If you start making more money, start saving more money. Don't start spending more money, and always spend less than you earn. Start saving when you're young. Start saving in your teens. Start saving in your early 20s, and you should be able to retire when you're 40 or 45. And if you have a great idea, don't hesitate. Start your idea today. Even if you're not ready, start your idea. Don't wait for tomorrow, because that's called procrastination, and tomorrow might never come. If you wait around to make your idea perfect, it's never gonna be perfect. Start today, and then you will start toward that perfection. And you won't feel the regret of not having started at all. Folks, hopefully you enjoyed this program. I do this every day, and I will have 500 to 1,000 subscribers by the end of this year. It would be great if you could join the ride with me and subscribe to this channel. It would mean quite a bit for me, and I will definitely continue to bring you financial literacy, the latest on crypto and Bitcoin news from all around the world. And please like, comment, and subscribe, and we will see you on the next stream, folks. Thanks so much for joining.